Let's talk. Hi, I'm Lance Bowman, Wealth Advisor here at Precedent Wealth Partners, along with my colleague Harold Williams. And today we're going to talk about the importance of experience in your financial advisor relationship. Harold just completed his summer internship here with us. And so, when
I was wondering why they wanted me on this this particular recording, but obviously, not my first rodeo.
No, definitely not. So definitely a lot of great wisdom that you've been able to gain over your years of working here in the industry. So I wanted to talk to you a little bit about that. So maybe talk about your service, and then we'll kind of dive into.
Well, I've been doing this longer than I care to admit, but and it's been a great experience, and I still enjoy it more every day than I can ever remember. Helping clients and families, really optimize their wealth and accomplish their goals. This is a very rewarding thing to do. It's just personally fulfilling. So, but I know you want to kind of transition into this whole subject of, the sort of trying to answer the question or make the case maybe is, are advisors worth it?
Right.
And
yeah, I think sometimes when, someone hears you're a financial advisor, they automatically just think about, oh, you must trade stocks, or you have any good hot stock tips for me?
Yeah.
And well, that's a part of what we do, obviously, with the investment side of things. But I think there's a lot more that people don't fully understand or appreciate that we do. And I think that's where the value really comes in. So when you start to think about that, what would you say, or maybe some of the 2 or 3 highlights that
I would agree with you. First of all, I think that obviously clients' portfolios in most cases, that's the engine that's pulling the train.
Right.
So you need to get an optimal return, an acceptable return, and so a lot of what an advisor does is try to make sure that we're picking the right investments. And of course, we're swinging for batting average like anybody. We're not going to be right every time. We're trying to raise the average and maintain some consistency. But I would also say that really in the overall scheme of things, the value we can add in that area is probably the smallest component of the total value add. I mean, and a lot of times here we say we hope we can add enough in the investment selection to sort of pay our cost. If we can do that, then everything else we add is sort of gravy. And there's been some studies on this. I mean, you'd kind of think, well, when you talk about these other areas, and I'm talking about behavioral sort of coaching that people need, the wealth and financial planning aspects of a relationship, and tax planning. When you think about those, you think, well, that's all kind of soft stuff. How do you quantify it? You'd be surprised. There's been, I've seen over the decades I've been in the business, a number of these outside organizations that are part of our industry actually try to measure, those elements. I mean, you've probably seen some of that, over the years.
I have.
And
I think that you touched on behavior, because I think there's been definitely a transition. You've probably seen it in the course of your career and even in mine, and coming up on almost 30 years now. But, for the longest time, you had to have a, quote, stockbroker to invest with. And then as we've seen things transition over time with the growth of the internet and just online trading, and the costs have come down, it's made it much more easy for anybody, just on your phone to complete a transaction.
Investing can be a do-it-yourself, exercise, and that's perfectly legitimate. I mean, it's important for people to do their homework if they're going to do that. Otherwise, they're just kind of, it's close to gambling.
Right.
But there's obviously some of that goes on today. But I think if we should say right off, if people are really willing to put in the effort, there's nothing wrong with managing your own portfolio. Right. Hopefully, we can add value, in that area. But I think you mentioned the behavioral part. That's really important. And I think back to some of the studies I've seen over the years. Vanguard has published some stuff. Morningstar has published some stuff. Russell Investments has published stuff. And, they come up with what's the total quantifiable add that you get working with an experienced fiduciary financial advisor. And they come up with numbers that are 3 to 4% or more average per year to your wealth outcome, bottom line. I mean, that is very significant when you compound it over a lot of years. And actually, the behavioral coaching is one of the biggest components of that, maybe the most important component. And I don't have to tell you because we've both experienced this with clients over the years. Keeping people from making a bad decision at a key point in time is maybe one of the most important things we do for them.
Agreed. Yeah, I mean, because when you're doing things on your own, there's nobody there to stop you, right? You can pull the trigger on that trade, or decide not to do something, or move all the cash, and nobody's there. Whereas I think having an advisor on your team brings that value, that person, like you said, to keep you from making a big dumb mistake.
Yeah, and I'll tell you, you when you're doing it yourself, one kind of really way to realize the emotional pressure of that is the only person you may really be answering to is a spouse who might not be all that involved in the decisions, but knows the outcome, and that's an incredible amount of pressure to carry,
Yes.
And so no, I think I think back to the most recent example is probably the COVID period in 2020 when we had the fastest bear market on record. 34% decline in the S&P in a matter of like 5 weeks.
Right.
And, you can just, it's not hard to imagine, people that are managing their own portfolio can look at that and say, this is dropping like a safe off of a building and there's just no stopping it. And there can be great pressure to get out. And yet that would have been precisely the wrong time, to make that move. And of course, you and I were both around in the business during 08, 09, the great financial crisis. That was a different kind of pressure because it was just a grinding down over, a total of about 30 months. And, that'll wear you out.
That was a tough time. I remember that. Yeah, both from, like you said, dealing with clients, and I remember that time just being on phone calls with clients all day, and I come home from my wife and talk to my wife. I'm like, I'm just exhausted. I've been in calls all day, just trying to talk clients down. Like I said, being that valuable advisor to try to help them.
Keep them focused on the long term and not get absorbed by the short term. And of course, we're recording this in a period when we've got geopolitical events going on, and that's, we know that the history on those is geopolitical events almost have never been a fundamental reason to exit the market. In fact, more often those kind of dips are really proved to be great buying opportunities. And but I think a financial advisor can be that kind of reassuring coach that helps people, steady themselves and not get panicked. You know, and of course we live in a world today where the 24/7 news flow is just they thrive on short term reporting, and it just feeds quick reactional decision making.
Right.
So, we probably ought to touch too on the wealth planning aspects. Kind of a lot of what we do, as is more the financial planning overlay, and I think that's a lot of value add.
Agreed. Yeah, that's where I was going to head next because, like you said, I think that's where we can really shine and bring. Whereas, like you said, the behavioral type stuff, you might not see it immediately, right? You can say, "Oh, I kept you from pulling the trigger on that move of moving all the cash or selling that particular stock or fund at that time." But the planning, the tax planning, the retirement planning, some of these more in-depth type of analysis that we can provide to clients, I think that really comes down to where they can see real dollars being saved.
Yeah.
And so talk a little bit more about that, some of the services.
Well, no, I think, you think about people making that transition in their life when they're moving from a regular paycheck to now they're going to be retired. They're going to have to live off the portfolio. They've built up their savings in these different buckets, and now it's, well, how do I have a withdrawal strategy, and how do I create a replacement paycheck? And there's a lot of optimization that can go into that, and we're in a good position to model that for people and help them figure out, well, when do I want to dial my Social Security in? Do I want to take it early? Do I want to take it at the regular time? Do I even want to delay it? And I would just take this opportunity to say that's a decision that's easy to find so-called answers to in the popular press. Oh, you should always take it early, or you should always do this, or always do that. Just forget that. It depends on somebody's circumstances. There's no generalization one can make, about that. Every situation is unique. So, I think helping people not make a mistake in one of those key turning points in the planning work is huge, and we certainly think we want to try to help people and add value there.
Yeah. So. Yeah, I think that's you hit the nail on the head, and the key word, it depends.
Yes.
How often do we have to say that to clients? Because there is no cookie cutter, one size fits all.
It's not.
It's a unique, answer to each body's situation, because there's different factors.
And whether people come to Precedent or some other firm, I think we would affirm hiring a pure fee-based fiduciary financial advisor who has no axe to grind in advising you on those decisions. That's really the blue chip model.
Absolutely.
People ought to follow.
Absolutely.
We ought to just touch on too, before we wrap this up, tax planning, because taxes are they're a reality. They touch almost every decision that we're helping people with, in wealth management. And we've got, the tax code is not simple. It's incredibly complex, and there's just all these different, kind of avenues that you can take, both in saving money and then drawing it down.
Right.
And so we love to model that kind of stuff and try to help people make wise decisions. And then just in terms of maintaining their portfolio, trying to do tax loss harvesting where that will work, help people think carefully about decisions like Roth conversions, or while they're working, Roth contributions versus pre-tax.
Yeah.
So, it's everywhere.
Right. I think it's find that balance, right? Because earlier when we talked about behavioral stuff, that's something that can be more of a long-term before you see the fruit of that decision. Whereas the tax planning, we deal with our taxes every year.
Every year.
We have to deal with that.
Exactly.
And so any move that we can help our clients save money, both this year, but also then show them the long-term, compound benefits of that tax savings trade, as you touched on with the Roth conversions, can be a huge factor.
Yeah.
And gets back to that true value add, the actual percentages of adding, 2%, 3%, 4% of value. Again, that's not a guarantee. But just something that can
we'll
add
get
up
that
over
into
time.
the caveats here at the end.
That's right.
But I think those studies have confirmed, though, over a lot of studies over a long period of time that we're not, those aren't made up numbers. They're kind of real.
Right.
So
I think that there is something there said that we do provide value, that we do earn our keep.
Yeah.
That sometimes people push back on paying a fee. They're hesitant to working with advisors because they don't want to pay a fee. But I think when we talk about these issues, that shows the value and the benefit.
Yeah, and most advisors, we can close on this, but I'll make this point. Most advisors are structured somewhat like us, where you're not committed to hire them for a long period of time. You're free to go whenever you want, which means they're on a short-term contract. If they're not adding the value, and if you don't perceive the value, you can leave.
Right.
And the statistics are people don't leave. Those are our statistics, and they're true for many advisors. So if they're not walking out the door, they're looking at what you're doing, and they're making a decision, this is worth it.
Great.
So,
well, Harold, thank you for sharing some wisdom with us here. And as always, just remember that this information is for educational purposes only, general in nature, no actionable investment advice being shared here. But if you have any questions, please don't hesitate to reach out and talk with us. We're here at Precedent Wealth Partners. Let's talk.